Welcome back to the Commercial Real Estate Show. I'm Michael Bull. Thanks for being with us. Well, today we're talking about retail real estate. And as a reminder, if you'd like to know the absolute latest on any commercial real estate related topics, check out our on-demand show podcast. For example, last week we covered the office sector, and the week before it we looked at commercial real estate development. There are lots of interesting shows to choose from. Grab your phone, tablet, or computer and visit iTunes or the show website, commercialrealestateshow.com. Well, please welcome my next guest, Mez Birdie, Director of Retail and Investment Services at NAI Realvest in Orlando. Mez is a CPM, a CCIM, and a past president and instructor at IREM. Mez, thanks for joining us today.
Michael, good to be on your show. Thank you.
Well, thank you, Mez. And I'd like to ask you, I mean, you're on the ground level there in Florida. You know, what are you seeing for retail rates and occupancy trending at this point in the market?
Sure, Michael, you're correct. I'm the boots on the ground, and so both retail rates and occupancy are not only in Florida, but I think regional-wise are on the increase. In general, retail rents or retail rates have increased 2 to 4% in the past 12 months, and occupancy also, while it hasn't increased up to 4%, it has increased 2 to 3%. So in general, the trend is up, and we see it continuing in 2014.
Well, it's interesting. So are any of the tenants having a problem finding good locations? Has the lack of new construction affected that in the markets that you see yet, or is it still they're able to find some good locations?
Michael, it varies by sub-markets within each city. Some sub-markets are strong, some are weak, and during the recession or the downturn, most retailers were focusing on A and B centers, rightfully so, because there was abundance of place. And as the market has improved and economy has improved, A and B centers are getting filled up, while the C still have availability. So the landlords are really focusing on, or cherry picking, if you may, focusing on national and regional tenants. And then the mom and pops would come, after them.
I see. And which types of tenants are most active right now?
The dollar store and discount retailers have been the most active, really, not only right now, but for the past couple years. While the economy has improved, Michael, the recession has caused many shoppers, many consumers to become thrifty and frugal. And we see that trend continuing. While things have improved, people are saving more, and when you save more, you become more thrifty and frugal in your buying. But the dollar stores and discounters have done well. And on the restaurant side, the fast casuals concepts such as Payway, Panda, Moe's, they are the most active. So, you're seeing both restaurant and retail improve at that end.
I see. And what are you seeing for contraction and closing? Which tenants are kind of contracting in this market?
The middle of the road is where the contraction is, Michael. High end and low end are doing fine, both on the retail side and the restaurant side. But if you take the middle of the road retailers, or what we would call the department store retailers, which would be Sears, Penny's, The Gap, they have announced a store closing and contraction because the sales have just not been there. Conversely, the high-end retailers have done well, and then, of course, the dollar stores have been the darlings of retail, during the hard times. And the same applies on the restaurant side, Michael. The casual dining, which the middle-of-the-road casual dining is weak, while, again, high-end restaurants have done well, and the fast casuals, which I mentioned earlier, are really doing well.
I see. And how did holiday sales fare for various types of retailers?
The bricks and mortar stores, which would be your normal store, whether it's a freestanding store or an inline store, sales have been up 3 to 3.5%, Michael. Mm-hmm. But e-commerce or internet sales have been up 15% plus. So we have seen this trend now over the past few years, whereby the brick and mortar stores are, kind of holding their own, if you may, but E-commerce is really on the rise. And the department stores are suffering while the specialty retailer is really doing better.
I see. I wonder about the Hispanic market. What do you see there? I mean, that's a growing area, isn't it?
Absolutely, Michael, you nailed it. That's the fastest growing market, not only in the southern part of the country, particularly whether it's Texas or Arizona or New Mexico. Of course, in Florida, South Florida, you have the Cuban and other Hispanic influences. But really, even throughout the nation, it's the fastest growing segment, mainly because they have more income to spend, and the population is growing. So I think the Hispanics are taking the lead right now. But in a couple of years, I think the Asian and the South Asian segment or that ethnic group will also be coming up.
Yeah, that's a great vertical market to look at, I believe. And so what do you see for tenant concessions right now, Mez? I mean, a lot of these tenants have been used to getting great deals and concessions from landlords. What do you see right now? What's the trend?
Michael, the concessions are still there, but they have slowed down considerably. Landlords are saying, look, over the past 3 to 5 years, we have taken a shellacking by giving a lot of concessions, redoing leases, redoing rents. And as the economy improves and the market firms up, some of those concessions are kind of pulling back. I'm not saying they've gone away, but certainly not to the extent that they were there, 2-3 years ago. The true answer really, Michael, depends on the credit of the tenant, the credit of the retailer, or lack thereof. And what I mean by that is if you're a national or a retail tenant, landlord wants you, you've got a good balance sheet, a good financial statements, you're going to get some good concessions. If you're a mom and pop or a local retailer, whether starting out or whether you have a couple of stores and your balance sheet is good but not as strong, then the concessions are less, because really the risk for the landlord is much more for the mom and pop tenant as opposed to a national tenant.
Yeah, some things never change, right?
No, and that will come.
And what do you see for store sizes? With the growth in internet sales, are more tenants reducing the size of their space?
Sure, absolutely, Michael. That really started about 2 years ago. You've got the big kahuna, Walmart, whose superstore at one time was over 200,000 square feet. Now it's 150 or less. And then you could go down to the office supply store segment, whether you're Staples or Office Depot or Office Max, which are now combined. Their footprint was in the 20,000, mid 20,000, and now they're dropping down to 16 to 18,000. So reason not only because of internet sales, Michael, but the retailers have to watch their occupancy cost. And, 2 walls are cheaper than 4 walls. And what I mean by that is that if you're a freestanding store, you've got 4 walls and more expenses. If you're inline and on a smaller size, and it's cheaper to operate, with a neighboring retailer, and that's what I mean by, 2 walls. So you're going to see that trend continue. But to combat it, Michael, the buzzword for the past year has been omni-channel retailing, and where that came about was, we're all familiar with showrooming, meaning a customer would go to a store, look around, and then go home and buy from Amazon, or if you were looking for clothing, you would go to Zappos. So,
right, that's a good point, Mez. Retailers are concerned about their costs. We're going to take a short break here. Well, stay with us. We're going to talk with Mez Birdie some more. We're going to talk about landlord leasing strategies. I'm Michael Bull. This is the Commercial Real Estate Show. We'll be right back. The Commercial Real Estate Show is brought to you in part by your friends at Bull Realty. When your business requires proven performance, visit bullrealty.com or call 800-408-BULL. Welcome back. I'm Michael Bull, and this is the Commercial Real Estate Show. We have some great shows coming up for you, including separate shows with updates on the multifamily, industrial, and hospitality sectors. Be sure to catch shows of special interest to you. Sign up for a once-a-week email announcing the show topic at commercialrealestateshow.com. Well, Well, today we're discussing retail and retail real estate. My guest is Mez Birdie with NAI Realvest. And Mez, there's still plenty of retail landlords seeking good tenants. I guess all retail landlords are always doing that, right? So let's talk about some leasing strategies. What are some strategies and best practices for landlords to attract and keep these good tenants and increase their occupancy in their retail properties?
Great question, Michael. Really, the first and foremost would be whether you're a mall or a shopping center, grocery anchored, or even a strip center, a great curb appeal and an attractive building facade is key. And curb appeal meaning as a shopper pulls up, they want to see attractive landscaping, well-maintained parking lot, a good facade, a good signage. So that would be the paramount. And secondly, the landlord needs to maintain the property. Parking lot needs to be swept. The lighting should be good, no potholes. Parking lot needs to be clean. Third would be, and probably also very important, would be a good tenant mix, Michael. A good center should have a combination of retail and service-related tenants. So the shopper then can do some retail shopping and also get their service-related needs. Or whether you're going, to a pharmacy, or whether you're going to your accountant, if they're there on the service side, that would help. Fifth would be good reputation and credibility of the landlord. The downturn has caused many landlords to foreclose. They have had financial difficulties, so a tenant wants to make sure that the landlord is going to be around and perform what they say, and that's what I mean by reputation and credibility. Six would be flexible lease terms. And when times are good, landlords can say it, whether it's my way or highway, but in these times and during the difficult times of the past few years, landlords have to be flexible lease terms, whether that's number of years on the lease or whether you're giving any concessions, free rent, tenant improvements, build out, all those things what I mean by a flexible lease terms. Market rents. Landlords really need to know what the market is. You can ask for a high rent, but if you're not keeping up with the market, you're going to lose your tenants. And that's what I mean by short and long-term leases, depending on the credit of the tenant. And finally, Michael, I think building relationships. A lot of retailers, and this is just not a touchy-feely thing that I'm saying, but whether you're a retailer or a restaurant or someone in business, you want to build a relationship with your landlord, and I think landlords want to do the same. So landlords really are trying to be, and I think succeeded in being relationship-oriented as opposed to transactional-oriented, meaning not just doing a deal and be done, but be concerned about the welfare of a retailer. If you're a big retailer, you can look after yourself, but the mom and pops need a lot of input and a lot of support from landlords.
Yeah, those are very good points, Mez. And let's talk about a good tenant mix, because I think that's more important in a retail center than any other property sector, isn't it?
Absolutely, Michael. And, if a center is no longer a retail center, it's changed its use. Some of the older centers, they are being occupied now by, and I'm not knocking the use, I'm just saying this is reality. If it's not a retail site, it's going to change its use. It's going to have either a municipal or a governmental office. It's going to have a church in it. It's going to have a library in it. All that is fine and good, but they're not retail uses. So if you're a true retailer or a restaurateur, you want to be amongst retailers and restaurateurs and service users. And these hybrid centers, which landlords fill space to occupy the space, sometimes hurts the tenants. And that's what I mean by a good tenant mixes. Each tenant needs to complement the other.
Yeah, that's a very good point. And then a lot of landlords are trying to fill space with medical tenants. How do you feel about medical tenants and tenant mix issues?
That's a positive, Michael. Another good question, especially as our whole medical system changes. Medical users find out, and whether you're a medical clinic or, if you're a freestanding, it's called doc in a box. Medical users find out that being in a shopping center gives them the visibility they need. It also is easy for the customer to reach them. So I think medical uses are a plus, not only for the retailer, but landlords also. And you're going to see more and more shopping centers have medical usage in them, which is a plus.
Yeah, that's a good point. Well, Mez Birdie, thanks for joining us today. We appreciate it.
Michael, thank you for the opportunity. Always good to be with you.
Well, thank you. And those were some good tips by Mez to maximize the value and occupancy of your center. And next, we're going to talk to a broker about selling your asset and look at some benefits and best practices there. If you'd like more from Mez Birdie, visit realvest.com. This is the Commercial Real Estate Show. I'm Michael Bull. We'll be right back. The Commercial Real Estate Show is brought to you by Atlanta Office Liquidators, new and used furniture liquidators, France Media, publications and conferences, and Bull Realty Commercial Brokerage, a great place to do business. For more information on these companies or to access additional podcasts, videos, or blogs, visit commercialrealestateshow.com.